What's good, fam? It's Rappin' episode 25. It's your host, Don Bucks. And you know this, the home of business and financial conversations from a young black perspective. So, if you're watching this on YouTube, feel free to hit the like, subscribe button. We're also available on Spotify, Google Podcasts, and Radio Public. So, check that out when you get a chance. The reason why we like to say hit the like and subscribe button, for a lot of people don't know, is that helps to promote and push out black media, especially this channel. So don't think that is, for self-promotion. That's basically to promote black media, because we want to, here at Rappin' we like to put forth our own narrative versus having the CNNs and the CNBCs put our narrative out for us. So we also we like to have insightful guests to give up this free game for lack of information that's been, we've been exposed to as a community. So without further ado, I got my bro here. I don't know if y'all seen the last episode he was on. It was pretty lit, but he's not even a guest. You know what I'm saying? He's a non-guest. It's my big bro right here.
Appreciate that.
And this guy is an insurance guru.
I can go with that.
Amongst other things. You know what I'm saying? Calvin O'Neal.
My man.
What's happening,
What's good?
kid?
What's good, baby?
Oh man, it's we back at it.
We back at it.
Yeah, we're gonna get into it. So for the people who haven't seen the last episode, why don't you give the people a little background on yourself?
I mean, been in the financial industry / insurance industry for the last 8 years. January 22nd made it 8 years. Been doing it full time. Have thousands of clients. And I basically just educate clients on how life insurance works, mutual funds and stuff like that. Just make sure that they understand what they're purchasing. Yeah, of course, you have to sell it to when you switch them out of their stuff, or you educate them. 9 times out of 10, they're going to switch because they don't know what they actually purchased and what they purchased. So then I break it down how all the different policies work and just give them an opportunity to make a well-informed decision on what they've purchased.
So full time. So what was you doing before?
Oh man. I was in, when I first got out of high school, I went to the United States Army. I was a nurse. I was a combat medic, then I became a practical nurse. I was in the reserves for a while. After I got out of the Army the first time, came back. Then I went back and active again and became a United States Army recruiter. So when I kind of switched career paths, because all of my friends that are now veterans that are retiring, they're nurse practitioners, at least RNs or respiratory therapists, but they all pursue medical careers in the medical field. So like my old roommate is crazy. He's a doctor. I found him on Facebook. He went from LPN school to RN school to becoming an ortho surgeon. Now he retired as an anesthesiologist.
Wait a minute, so he got all that while he was in the Army?
All of that while he was in the military.
What's that, GI Bill?
It was a lot more than that, but it's a couple other programs too, but it's crazy. And then my cousin Corey, he's actually he's a little bit different. He went to LPN school, like the class behind me. He became an RN, but he when he got out the Army for like a month, he had to go back in to keep his rank. He had to go back in as a CAV scout. Went to Iraq, and he went to Iraq like twice, Afghanistan once. But the whole time he was an RN on the side. He retired, worked as an RN. He just finished his certified registered nurse anesthetist school. So yeah, so he's in anesthesiology too, but it's just on the nursing side. So like these dudes, I'm talking about these brothers, like my roommate that was a doctor. Shout out to Brian Edwards. He actually just opened his own thing in North Carolina, his own practice. I mean, these brothers making $300,000 to $500,000 a year with their retirement and their education that they acquired in the military. So, it was definitely the medical field or the nursing field would have been a lucrative career path for me. But when I got trained as an Army recruiter, I got turned into, like, I got more in tune with sales, like how to sell people, how to present proposals, demographics.
As a recruiter, yeah, you gotta get familiar with how to.
Right. So I was actually a recruiter in Lower Bucks County, and a United States Army Reserve recruiter in Lower Bucks County. So I had like 9 schools. And they were, being that we're from, we from the town, they was like, oh, this, you can't, nobody joins from this school or that school. And I was, listen, you could do this or you could do that. Like, you could stay in the hood and be a nobody, go to community college for 5 years, or you could go let the Army pay for your education, get a solid career, and it worked. So, stayed in the Army for a while. Then I got out, started my entrepreneurial thing, ups and downs, was a loan officer at Ace Mortgage Funding in King of Prussia before the mortgage crisis hit, was a headhunter for a company in North Jersey. Basically,
08.
that was about, I was at Ace Mortgage Funding from the beginning of the end of 07 till the beginning of 09. And then when everything went south, I think they still owe me a couple dollars too. But my boy, a good friend of mine, Charles Stanfield, South Jersey basketball star, went to Duquesne on a full scholarship. He actually got me in a job. Was making great money. So, but like I said, they closed. When they so now I became a headhunter. It was cool. Gotta find specific people for
Headhunter.
Yeah, when you find specific people for specific jobs. So let's say your company's looking for a senior or executive member, for their staff. They want somebody that's has certain qualifications. Just like right before LinkedIn and Monster Inc., Monster and all of that. So we would sit, go out, meet with candidates. Instead of having them come to the job, these are high caliber candidates. We would go get their resumes, authenticate everything, and I would meet with them and see if they met the criteria, and then they would come meet with the job and stuff like that. But they're getting, high level 6-figure jobs. So and that taught me, again, more sales experience. Then after that, I became an assistant director of admissions for a technical school. And then,
damn, all this I ain't even know.
Yeah, so then
shaking out.
Yeah. So then after that, I actually got introduced to the financial industry, and I would love to tell you guys that, I have an extensive educational background. No, it didn't happen like that. It was a lot of hands-on experience. It was a lot of sitting with clients, understand, researching policies, all types of policies. First, you got to learn the type of policy that you have. But if I'm gonna say something about the competition's policy, I need to learn that policy inside and out.
Yeah, because that was gonna lead me to my next question. Like, you was doing like insurance.
Mm-hmm.
There's a whole lots of different ways to sell something.
Mm-hmm.
What made you want to do insurance?
Well, I'm from Trenton, New Jersey. You're from Trenton, New Jersey. So
shout out to Trenton.
Yeah, shout out to Trenton, man. I mean, Trenton give you it's like putting turkey necks in your collard greens. It's gonna give you a different flavor.
That's a fact, though.
So it's a lot of stuff going down in that little town. Seven square miles or whatever. It's a lot of stuff with like 90,000 people, and So basically, first I didn't know that insurance salesmen got paid so well. So and as you climb levels or ranks, you get compensated even better. And so even at this point in my career, I'm more into financial distribution, where I teach other people to do what I do. But initially, I would sit down with a client. Let's say I was probably at my first 30 to 40 days. 30 to 45 days, I was at 50% contract. So what happened, I would sit down with a client, and I would get paid 50% of whatever they signed up for. So you're talking about if they signed up for, let's say they signed up for $100 a month, I would get paid $600. Which, I mean,
wait. If they sign up for
$100 a month, right? I would get paid $600.
Oh, okay.
Right?
Because it's 12 months.
12 months in a year, I would get 50% of that. Well, a lot of people don't get paid like that. Other insurance companies don't get paid like that. And as we dive into this episode, I'm going to explain to you how they get paid. And a lot of people would be shocked, how these other agents get paid. But my company specifically, they kind of front us the money. So I can't just run around and sell life insurance to anybody, because what happens when you in the hood we call it ass bang. Like when you put something up that you don't really have. So if I sell it to somebody and I don't educate you on it, and a better salesman comes along, what's going to happen? You're going to go with them. So I educate my clients on how this stuff works. We build a relationship. You know, they have enough money. We start them some type of investment so that they can reap the benefits of the whole system, not just buying life insurance. Because I do more than sell life insurance, but that's the foundation. I start with life insurance. And let me explain why. Let's say you came to me, you said, Cal, I got $200 a month that I can set aside. And let's just say we took the whole $200 and we invested in a mutual fund. We work with several different companies with mutual funds, right? You took the whole $200 and you invested in a mutual fund. You're going to get a decent rate of return, better than you would get any bank, any other insurance company, right? So what would happen is, let's just say, for the sake of math, simple math, after 1 year, how much you going to have in there? It's $200 a month. That's $2,400. Even if it's $3,000, right? After 2 years, it's $6,000. You pass away, your family got $6,000. That's not even really enough to bury you.
Not even talking about the interest.
No, we ain't even talking. I'm saying, let's say, what's some interest? Let's say it's the 200 a month turned to 3,000. That ain't bad, right? But let's just say you passed away, you had $6,000. What could your family do with $6,000? They when they bury you, let's say a cremation is $5,000 to $7,000. A funeral is $10,000 to $15,000. That's just going to be a down payment. Now, if you have children, a significant other, or any responsibilities, that $6,000 is not going to hold too much weight. Now, let's flip it. Let's just say, I said, how about we invest $100 a month for you, right? And we take the other $100 and we invest in some life insurance. And we get you for $100, you probably would get, depending on your age, your health and stuff. Like, let's just say, hypothetically, you got $250,000, but you still got the $100 that you're investing. If you died in the next 2 years, you may have the $3,000, right? Because you're gonna cut the $6 in half, right? But your family will get $250,000 if you die. That's how you change. That's how you change things.
Facts.
You know what I'm saying? Because like you got, even if you did the math, so if you did the math, like let's say the average policy was 30 years. The average policy I write is about 30 years. And you spent, and again, because everybody's not going to be $100. A lot of times when I sit down with people our age or a little bit younger, it's like $100 for a whole family, right? But let's just say a person spent, a family, let's say, because I want to use one person. Let's say a person spent $50 a month to protect themselves. That's $600 a year. And so in 10 years, that's $6,000. In 20 years, that's, you know what I'm saying, $12,000. In 30 years, that's $18,000. If you die before that 30 years, how much money you gonna get? Let's say you got $200,000. Was it worth it? You spent 18 to get 200,000. Your family in a better place.
I think it's worth it.
I think it's worth it.
Yeah.
So a lot of times I sit with people, they're either uninsured, underinsured, right? Or think they're covered through something at their job, right? So what I mean by uninsured, that's obvious. They don't have anything. Underinsured, they're paying too much money for too little coverage, right? You think, okay, so for example, you bought $50,000 worth, you got $50,000 worth of coverage, but you make $100,000 a year. That just means when you die, your family gonna have half a year worth of salary. Right? It's simple math, right? So one of the things we always say, if you had a goose that laid golden eggs, I don't even think we would eat chicken in our house. We don't want nobody to miss. We don't want to make the goose nervous. We don't want to make the goose upset. We want to make sure that the goose keep laying the golden eggs. Well, when you die, life insurance doesn't replace your life. It replaces the income to make sure that your family still can function while you're not here. A lot of us talk about death burial insurance. It's a big difference. When you just have enough insurance to get buried, your family's at a disadvantage.
So you can basically set somebody up to have X amount of money, like you said, for your example, 250,000. But let's say they was also investing too.
They can invest as well.
So, that 250,000 will cover whatever family needs or whatever, but they still had that investment that's still bubbling. No, so what happens is this is what happens. A lot of investments have beneficiaries, and people don't know that, right? So in the event, like in my case, I have $500,000 worth of life insurance.
but Trent won't let me die like on a League of Extraordinary Gentlemen because I should have been going a long time ago.
That's a
with
fact.
The way art, yeah, right.
A lot of stuff out here.
And we lost a lot of friends, right?
Yeah,
so
man.
but I was just kidding. That was just a joke because people like
right.
So I do. So back to I got $500,000 right in life insurance. And I have, of course, I got Roth IRAs and retirement stuff in place. In the event that I was to die prematurely, instantly my wife would get $500,000 and she knows exactly what to do with that money. So in our case, she would probably live off of $100,000 to $150,000. She would take $350,000 and invest it. She's investment licensed. Like this is not like a hypothetical. Right. She's investment licensed, so she's gonna take $350,000 and invest it.
That's solid.
Right now, this is the crazy part. If our company been averaging about 10% rate of return over the last 43 years. That means that my money, the $350,000 is going to double in 7 to 8 years. So remember I had $500,000. She lived off the $150. She's still working. She's still going to have our firm, right? Or our brokerage, our office. The $350,000 going to double in the next 8 years. It goes to $700,000. Cal's been going for 7 years. She takes out the $200,000. She leaves the $500 in there, and in 7 to 8 years, that doubles again.
See, this is the game, man. So, all right. What's your take? Because all this is information that we should have gotten in high school.
Everybody's like, Cal always in the school. Listen, one of the first things I did when I got this information, because we were young boys when you were working at the shop, all of us running around crazy, cars, clubs, clothes, just blowing money fast for real. Like the song Money Ain't a Thing was pop, like everything, we was really gambling crazy, and shout out to Mason's Barbershop because that's where it all started. And then I remember back in the day, it used to be like Mason's versus Razor Sharp. You remember them days? And guess what? The Razor Sharp brothers, some of the best brothers in the world, right? So what was going on is nobody gave us financial literacy. We was kind of swinging it or winging it based off of what our parents told us or some old head that we saw winning. Like remember back in the day, Lively had 2 Benzes. Lively had the square body S430. Then he bought the brand new S500.
Right.
And it was like, yo, when they first dropped, right after the buggy yard, and the big boy was the cat eye. And Live came through, and he was the only person we knew with. And I mean, there was cats getting crazy money, but they ain't have 2 Benzes.
But bro, that's the thing. Like, I be saying this. I've been saying this for a couple episodes. We got OGs out here that ain't giving up no game. So they basically O's without the G. They ain't giving out no G.
Well,
because Lively had some information that he could have shared with people, man.
I mean, he gave some. Like the thing was, like we were so young and wild, right? And because I remember him sharing it with me.
Like, OGs pull coattails.
Yeah, they do. He was giving. I mean, because you got to think,
your dad was running with us.
Yeah, he was right. I mean, running wild. I mean, but it was hard for them.
But he had it to,
it was hard for them V6s to keep up with them V12s.
Yeah, but he wasn't giving out no G, bro.
I mean, so the thing was,
that's my man, but he wasn't
getting. Well, this is the thing. I mean, I don't think he wasn't doing the class. So that goes back to my original point. When I got this information, I'm like, yo, I gotta go to the schools and talk to these kids, because if I knew this back in the day, the first thing I would have did was put up some paper. Instead, I'm blowing money fast. I can't get caught in the same shoes or outfit twice. Gators, Coogee sweaters, full length furs, 3/4. I can't get caught in this stuff twice, right? I messed up more money than anybody per capita. Like, so per what I was making, I was making, like, you gotta think, I'm 25 years old, 26, bringing home $80,000 a year, trying to blow every paycheck I could. I mean, I had my I was in the military, so I had thrift savings plan, and I knew I was going to retire one day. But I'm talking about I'm blowing, crazy, $400 dinners, on dates, just doing champagne and Palmers. You know what I mean? Mo was nothing. Buying Moet was nothing. Y'all want $100 a bottle, give me 5 of them. But I'm talking $400 a bottle, and we ain't talking about, we talking 2000, 99, 2000. Drink Cristal like crazy. Shout out to Ali. He was drinking the most
and
Cristal.
It was nasty.
It was Chris sweeter than that's a whole nother. I might have to come back for a champagne and fine liquor segment, right? So basically, I go to these schools, right? And I mean, it's simple math. So I'm teaching math to I'm teaching these basic financial principles to like 4th and 5th graders, Boys and Girls Club. Shout out to Reg at Boys and Girls Club on Center Street, staple in the hood for a lot of people, right? I'm going to elementary schools. I started in middle schools. So when I get to the middle school, I don't know the state that the middle schools are in. I'm thinking about when I was in middle school.
Right.
And we came from a money era. Like the streets could grab you because you saw cats getting money, and if you was poor, it would entice you to be a part of that movement, and so we jumped into it. Like, no, why we didn't? We had parents that were strict, but it was impressive. All the girls liked the dudes. I remember going to junior 2, 87, 88, 13 and 14-year-olds was driving to school. They had money. So we had the money era, but this era, 2-3 generations later, right?
What they doing?
It's death. It's drugs. It's drugs. It's murder.
But how you think we got there, bro?
Us. The old, we went
OGs
from
OGs not giving out no G.
They wasn't giving out no G.
This is what I'm saying.
They scared, so a lot of these OGs scared of these young boys, because these young boys will let you have it. But this the kicker. And this is a sidebar. Every death claim I ever paid was for a child rider. And a rider is something. It's addition to the policy. The initial contract. The rider is an add-on, right? So basically, you could get a policy and insure all your kids for the same price as one kid with the company that I work for, right? Or I don't work for them. I work with them, right? So until your kid's 24 and a half, about to turn 25, then they have to get their own policy. But imagine a mom having 10 single, let's say she had 4 kids. She got 4 single policies at $12 to $15. So that's $48 to $60 per, for that household to insure her kids. But what about her? Now you're talking probably another, let's just say for the sake of math, she's going to spend another $40 on herself. Well, that means less coverage for her because she got to make sure her kids are covered. When you can flip it with us, the mom going to get the most coverage. The kids going to all have the same amount of coverage as added as a rider up to 10 kids. It make more sense. So the mom may have $150,000, $200,000 depending on her age and what she can afford, but she got all her children insured for at least $20,000. Now, after I paid my first death claim, me and my wife discussed it. We said, listen, we're gonna always put $20,000 on the children. It sounds crazy because nobody wants to get rich off their kids, right? But people go above and beyond for their kids. So the funeral's always elaborate, but then you still have to consider the grieving process. You're not going to be normal working at your job if you lost one of your children. So when I remember handing that mom that check for $10,000, and I was heartbroken because I have children. You know what I'm saying? And it wasn't enough. $20,000 isn't enough, but that's my start. That's my minimum. I'm going to insure your children for $20,000. So at least you could go, if you go out on FMLA for depression or anxiety, whatever you're going through while you're grieving, you will have some money so you can still pay your bills. Where a lot of people just sell you life insurance and you don't know anything about that. You don't understand. Because you got to think, how many people in the hood got a life insurance policy and are really winning, are wealthy?
Not a lot, man.
Because they're underinsured. They don't have enough coverage.
If they're even insured.
So this is
what I'm saying.
So I had gone on another show and I had said some of our people can't even afford to die.
Right, I remember you said that.
And people got offended. But I'm from here. I've been in situations where I could have been over.
You ain't lying.
And I'm not lying. But
you can't afford to die.
You can't you can't be in a situation where you wreaking havoc in the streets or you involved in things that could take you away from here prematurely and not have your paperwork in order. You can't have children that are out here, running around in the streets like psychos, hurting other people and not considering they could get hurt back. And so as a parent, you got to put things in place because these kids don't know. They're not thinking that far ahead. You have to.
But so what's your perspective? This is phasing right. See, you phasing right into my questions. Go fund me.
Bro.
Go fund me. Like, what is?
It's so crazy because one of the things I hate to do, especially when stuff gonna be on like YouTube or as you videotape this and you put this in the air. I'm just keeping it tricky. It's my understanding, and I may be off by some percentage, but I'm not off a lot. That GoFundMe takes 30% of whatever you raise.
Really?
Yeah. So we could check the numbers, right? But let's just say, and I'm gonna give you an example. Let's say you raise 30,000 with GoFundMe.
They taking 10.
They taking 10. Now, and I'm saying that how many GoFundMes have you seen that were successful to bury somebody?
But my thing is this: why do we do this? Like we sold our culture for a lot of different things that we wait until something bad to happen until we now all of a sudden we want to make all these moves. Like we more so
reactive instead of proactive. Exactly. So this is the thing right here. People tell me I can't afford no $50 a month. Well, you damn sure can't afford $10,000 if you die then.
Right.
So it's better to figure out how you're gonna pay the $50 a month, because if somebody will tell me that, right, and they'll have the latest iPhone, they'll have the latest Android, they'll have I ain't even gonna get into the Jordan thing because we grew up on Jordans. You know what I'm saying? I never really was a Jordan dude.
I mean, now that's cool.
Right.
But, all right, while you can have Jordans, you can have an iPhone, you can have all this stuff. But why is that more important than?
Because we feel like they say that youth is wasted on the young, right? So we feel like we're never going to die. And just think about it like this. Think about it like this. Let's flip the whole narrative, because I know you're doing
best. We need to talk about death more often.
But you got to understand, we're superstitious people. We don't believe in jinxing. Now they don't want to talk about death. But just the crazy part, right? So Sonny Carson, right? So this the crazy part. Let's just say you got your life insurance straight. You told somebody that if anything ever happens to me, this is what my policy is. I'm gonna pay it, and I don't ever want to bring it up again. You ain't never got to think about it no more, but at least your paperwork in order. Right. It's like when you get your car, you get your registration. You first get your insurance, then you go get your registration, right? Mm-hmm. They inspect your car. I mean, they give you the little pink fake, 2 week, not fake, but temporary inspection thing, and then they give you your plates. Right. And as long as your paperwork good, you're not gonna have any problems. Is once that paperwork is not straight. So I'm gonna give you an example, right? Why is it mandatory for you to insure your car but not to insure your family? Because if you hit somebody, the burden is on. The burden could go either way. But when your family died, they know the burden's on you. It's a great question. Not to mention, how much does it cost right now for insurance? How much does it cost to insure your car? $100?
$200, something like that.
So think about it. Let's say it's $200. You can insure your family for like a couple $100,000 for the same $100. Let's say $100,000 on you, $100,000 on your lady, $20,000 on all the kids for like $100 and some change, depending on your age and your health. This the kicker. How much is your car worth? It ain't worth a couple $100,000. You understand what I'm saying? So
it's worth more than your life.
It's not worth more than your life, but people don't look at it like they don't look at it properly. Because this, even though we're not talking about retirement. Think about it like this. When we was young, like, bro, you was one of the most popular barbers in the town at one point, right? Y'all whole team, you, House, y'all was the most, it was like I said, it was it was the Razor Sharp versus Mason. This we talking 97, you talking like 95 to 2000 and some change, right? To like 04. What if somebody would have told you, all you doing is putting up money for one day so you can get out of the game. You could retire, right? How much money would you have put up? If they explained it to you, that's all retirement is. Put up this amount of money and you ain't never got to work again.
I wish, man.
They don't explain it to us like that.
This is what I'm saying, man.
They explain it to us like, right, they make it seem like 40 years is a long time. When you think that we've been out of high school for 20 something years, it seemed like yesterday.
Right.
If they explained it to us like, or stuff like, why don't they put like for example, if you put your kids, if you could put like make somebody authorized user on your credit card. I was like, how all these people have great credit? Well, if your parents got great credit and they throw me, now my parents got great credit, they throw me on as an authorized user on that credit card, it raised my score too.
Right. I just learned about that. That's a whole nother episode.
That's a whole nother episode, but this the stuff that we don't learn, and it holds us back. So again, you know, so back to the GoFundMe, you know, not because we ain't have ADD when I was a kid. We got beat. You know what I'm saying? We get popped with the ruler, get back on track, right? So basically, GoFundMe, if they let's say you raise 15,000 and GoFundMe keep 5,000 of it, that's beautiful if you still could accomplish your mission. But GoFundMe isn't life insurance. GoFundMe isn't. Guess what? If you have life insurance through your job and you move, and you leave that job, you no longer have life insurance.
That's what we think GoFundMe is.
It's not. GoFundMe is it's a fundraiser. It's a fundraising tool. But first of all, people have to like you. You know, social media is very fickle. Sometimes the story isn't always what the story is, but whatever story you get out there first, you know, it's always somebody saying that somebody did something, and if you're not popular, you can't rely on GoFundMe to bury you. So I mean, and most people, $30 to $50 will get them something decent to get buried with dignity. I don't know how good your family's gonna be after that. A month. That will put you in a better situation than nothing. You know what I'm saying? And
$30 to $50. Y'all hear that?
$30 to $50. And I mean, now you add stuff like if you smoke, if you're healthy, but for the most part, you gotta sit with somebody and get the question. Stop going to companies that you can call over the telephone because they'll tell you anything to get your business. They don't care about you. They don't tell you about the 2-year clause. You know, like, so for example, let's say I sat down and wrote you up as a client, but I don't tell you that if anything happened to you in the next 2 years, the company's not going to pay you. My company don't operate like that, but it's a lot of companies that do.
Ding, 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 ding.
So you run around here, I'm good, or a lot of times, like a lot of our 70% of the brothers from Trenton, New Jersey, age 18 to 42, have felonies, right? 70%.
I can go with that.
Just a stat that I got from the city. If it's a lie, they told me, right?
Okay.
So that means if your felony was in the last 10 years, most companies won't insure you. So what they'll do is they'll give you accidental death insurance, death, benefits, right? So if you don't die because of an accident, then you don't get paid. So I'm gonna give you an example. You have a heart attack. Now it's rare for
game.
Yeah, so you have, let's say you driving, let's say you drive in a car, you have a heart attack, and then you crash. Well, they be like, he died in a car accident. No, he died from a heart attack, right? And then they're gonna say, oh, you had all this potassium in your bloodstream. That's what happened when muscles die. Those levels showed he had a heart attack. He had a heart attack, but it wasn't. That's what caused the car accident, not the crash. You know what I'm saying? The heart attack is the reason why he crashed, not just a regular accident. They only want to give brothers with felonies accidental insurance, so they'll give you for $30 a month, you'll get $500,000. But if you die, if you don't die from an elevator, an elevator coil snapping and you drop it to the, bottom floor and getting crushed, or somebody don't drop a crane on you or something, deep. You don't get paid. You don't get compensated. Never gonna drive. I mean, yeah, if you had 10 of them, but I'm talking about, you need to get to work every day. Would you buy a car that you can't use? If you like this income tax cars, or would you buy a car today and knowing that when wintertime comes next year, and December of this year, you ain't gonna have that car?
So that's basically what they'll be doing, buying that kind of insurance.
Of course, because if you don't die, so that's why you always hear people like, this happens so many times, right? People always want to talk to me after somebody dies. Cal, my mom is on life support. Can I get her some coverage? No, it's not the lottery, bro. I can't. It's too late. She don't like. You know what I'm saying? Like, no, we don't know how that's going.
This, y'all.
Yeah, we got it. Yeah,
stop this.
Or they hit me with, Cal. Let's talk about this insurance my people got. Could you look at the policy? I could have looked at the policy for years. For the last 8 years, I could have looked at the policy, explained to you how this worked. So now that you're in this situation, you won't have any questions. And I don't think, I'm going to give you an example. Why buy something if you don't know how it works? Anything. Like, I'm talking about, you buy a stove. I'm talking about, you know what I'm saying? Like,
you don't read the directions on stuff.
You know what I'm saying? Like, if you, so that's the deepest part of the game right there. The whole point why I'm sitting here is because people think this is what people hit me with. They name drop companies, but it's like this. I'm gonna give you an example. They name certain companies, but I know how most of those companies' policies work. So when you say it, you think that you're impressing me. Right. What you're really doing is exposing the fact that you got some garbage. So, because I don't want to. So I covered the GoFundMe. I want to get to your next question because, like I said, I
Oh, nah, because the next question would be like, what are some actionable steps or items that we can do to combat this this reactive mindset that we have? Like,
you gotta get,
thinking ahead.
We gotta get we have to become financially literate. And what I mean by that is, like, so for example, wealthy people, first of all, most of them are self-insured. What that means, they don't need life insurance. They got money. And the key to the game is to have money.
Facts.
Now, the only way you're going to have money is if you stack your money. If you don't stack money, you're not going to just run it. It's very rare.
Stack it and...
Well, invest it, really. You know what I mean by what I mean by first getting the habit of being willing to say 20% of this month's salary or income is going to...
Oh, you're thinking 20. That's
20,
good.
right? I'm putting it away, right? And you can start with 5 or 10, but the goal is 20 to 30%. Because once you get that, now you guess what? Think about it like this. Why would you need Aflac if you had 30% of your income saved for a year? If you got laid off, you know what I'm saying, or you got hurt at work, you only it's cool to have it, but you're paying out money monthly and you may never get hurt at your job. I mean people hit me with stuff like, I got 5 or 6 policies. Why don't you just get one good one? Why you don't even know how you got 5, 6 things, you don't know how it works. You took what the salesperson told you. I'm from the town. I'm not gonna mess up my credibility, my name, to sell you some garbage so we could be fighting in the streets, because that's how most people where we from resolve their problems.
Yeah.
I want to do the right thing by everybody, because then that relieves it alleviates any stress that I'll have. Right. I don't have to look over my shoulder. I can do the right thing and just have harmony and love from everybody. I'm gonna tell you the right thing whether you want to hear it or not. So again, one of the things we could do to combat, most financial gurus will tell you, don't buy cash value products. Don't buy whole life life insurance. Don't buy universal life. Don't buy universal index or variable. Don't buy those. Buy a straight term. That's going to hold you down for a specific amount of time. So let's say you get a 20-year term, that gives you 20 years to stack whatever paper you need so that you don't need that policy anymore. You understand what I'm saying? Don't buy.
I heard, like, I don't know who I heard it from. They said whole life is better than term.
No. You know why? So let's go by those stats. Let's go by these, because I got so I'm gonna give you, so we gonna have a bank, right? Let's open a bank. Then you tell me if you like this bank or not. The first 1 to 5 years, you deposit $100 a month in my bank account. I mean, in my bank. This your bank account, but you deposit in my bank. The first 1 to 5 years, your money don't grow.
Or
no, it's no or. The first 1 to 5 years, your money doesn't grow.
But that's most banks.
No, I'm not talking. There's no money in your account at all. You putting $100 in, let's say 50 is going to your life insurance, 50 is going to your investment. When you look in your account, it's zero money in there. Remember I told you how
I like that bank.
But this is how whole life policies work. And people don't want to hear this, right? So listen to this. I sit down with you. I told you how I get paid in my company. I sit down with you. We gonna get you set. You can start saving some money right now, right? Because we go way back. Yeah. And I'm writing up the policy. I don't tell you that for the next 1 to 5 years, that savings that you thought you had gonna be coming to me in sales and commission fees.
Yeah, I don't like that bank.
So 1 to 5 years, your money don't grow, right? And anybody who got a whole life policy, you can look at your savings chart and it'll show you 1 to 5 years, the savings doesn't grow. Now, right? That's crazy, right? So then for the 1 to 5 years, your money don't grow.
Yeah,
if you listen to this, if you need to ever touch the money that you started, like that account wasn't like that account was already in place. You started this bank account. If you ever need to take the money, they're gonna give you a 6 to 8% interest interest on the loan. They're gonna loan you your money at a 6 to 8% interest.
With a whole life plan.
With a whole life plan. Listen to this. If you don't pay the money back, it comes out of your death benefit. So let's just say, hypothetically, you got a $50,000 policy. You borrow because you can't borrow all the money. Because you borrow $5,000 out of $10,000 you accumulated over 15 to 20 years. It takes a long time, right? Now, if you pass away without paying that $5,000 back, they get your family's gonna get $45,000 instead of the $50,000. But it was your money in the first place. Does that make any sense to you?
No.
And this the next part. When you die, this the real kicker. Oh, because I don't even want to hit you with that one yet.
Here we go.
The next thing is your money only grows at a 1 to 4% interest rate, 1 to 4, 1 to 5% interest rate. But when they loan it to you,
after the first 1 to 5 years.
After the first 1 to 5 years, it grows at a 1 to 5% interest rate. But when they loan it to you, they charge you 6 to 8% interest. Sometimes there's 100% cash surrender fees up to 15 years. So even when you put your money in it, you can't take it out for 10 to 15 years anyway. Like you can't say I don't want this policy no more, because it's 100% surrender fee for 10 to 15 years sometimes with certain policies. So let's just say you read it, Cal come talk to you, you don't like your policy.
For the people, what is a surrender fee?
The surrender fee is if you want to surrender this policy, it could be from 0 to 100% based off the years they have in place for the surrender. So if you got, let's say you had $10,000 worth of cash built up in that policy, you wanted to take it, they're gonna say, well, you're only gonna get $5,000 because you gotta wait another 5 years to get the whole 10. Nobody ever told us that though, right? Because where we from, we want to be in control of our money, right? We don't want somebody else to be in control. We want to control our own money.
And then they charging you 6 to 8% interest
if you borrow it.
If you borrow some of it.
So now this the crazy part. Let's say you had the $50,000 policy, and let's say your money grew to $15,000, $20,000, because you had it for your whole life, right? You had it for, let's say you had it for 30 years. You got first of all, $15,000 in 30 years. Is that a good investment?
15,000 in 30 years?
Yeah, you accumulated $15,000 in 30 years,
no.
Right? Now, check this out. You got your death benefit is $50,000. Your cash value, right, is $15,000. When you die, how much of your beneficiary get?
35?
They should get 65 because you got $15,000 in savings and you got $50,000 in your death benefit.
Oh yeah.
So you should get 65, right? But guess what you're going to get? They're going to keep the 15,000 and they're going to give your beneficiary the 50. Do you have $15,000 extra to give to anybody?
No.
So my thing is, because now what that did is because you got to think, you've been paying.
And this is your whole life.
This is whole life. This is cash value, because a lot of cash value products work like this. It's like one or two. There's a little slight variations. That's a class, right? That's not just me and you kicking it, So now the next thing is, think about it like this. You've been paying your premium, right, for 30 years. However much that was. Let's say it was $100 a month. Right. So you out of $1,200 a year times 10 years is times 10 years is 12,000 times 20 years is 24,000 times 30 years is 36,000. So you out of 36,000 and they keeping the 15 just to hand your beneficiary back 50. Did you need somebody to help you save 50,000 on $50,000? Nah. So we don't understand how it works, and you don't gotta believe me. Please call your company. Right? If you got a whole, because people die by whole life because they say terms run out. Call the company that you have and say, what happens to the cash value when I die?
Write that down.
Ask them what happens. Ask them how much money, if you had it for less than 5 years, say, how much money do I have in this policy right now? I had one client, she was a young girl, 30 years, she was 27, she had $30,000 policy, right? $30,000 policy, only paying $30 a month. Right? She had it for 5 years. She had it for 4 years. When we called the company, because I don't want you to believe me. Let's call your company. And I said, well, how much money does she have in here? They said $29. And if she wants to borrow it, $29. She wants to borrow the $29. She got to pay it back at an 8% interest rate. How could you borrow $29 after 4 years? You can't save $29 in 4 years.
That's all she had in there?
That's all she had in there. So what we did is we were
paying $30 a month
for 4 years. Right. So what we did was, she only had $30,000 worth of coverage. What we did is we gave her I want to make sure the numbers are right. I want to say $150,000 worth of coverage. We gave her Give me $150,000 worth of coverage for the same $30 with no savings in there. I just showed her how to put up $50 a month, and then in so many years she'll have $150,000 saved. In 30 years. But she got a 30-year level term for the next 30 years, and she's saving $50. If she ever need that money, she could access that money. It don't affect her policy. It don't affect the amount that her family gets, and none of that.
Okay, so I mean, we got deep. You gave up a whole lot of information, but you said we need to become financially literate.
Definitely.
So our people don't really like to read that much.
Well, I mean, in this world, first of all, you got audio books. You have there's books like Life Insurance for Dummies, or Investments for Dummies.
That's corny though.
I mean, it's
right.
It's,
I mean, that's corny to be smart.
It
seems like that's the case.
When we was young,
want to do that.
When we was young, we wanted to show how intelligent we were because we knew the obstacles that were against us. In this generation, and no disrespect and no hate to anybody.
Right.
You got people with degrees making less than strippers. You got cats that get on the internet with one hit song, and they got jewelry dripping everywhere, and the cat with the degree can't get a job. So it's instant gratification, time, society, And I mean, we had it too. You could hustle and do the same thing, and the cats who had the jobs was corny, but it's at an all-time high now. And what we got to do is we gotta have some substance to us. We gotta have substance, and one of the things that like a lot of my coworkers say is leaders are readers. Like you're never gonna know what's going on if you don't read. CNN can tell you one thing, like you said, you want to change the narrative. Read, educate yourself. Guess what? Read something that you don't like. Somebody read it and see and understand their story. Read, find out, open a book, learn. And like I said, they got audio books now. You could turn my car is a library. I got a CD in there, Jim Rohn CD in there right now. You can read. I mean, you can listen to a book. You in the car 2-3 hours out of the day, zipping around half an hour at a time. You can listen to stuff.
Listen to podcasts.
You listen to podcasts. You got education is not just in a book. Educate yourself. If you like, I get paid the least amount of everybody that I'm around. I'm around a million people who make $1 million a year, $500,000, $300,000 a year. I mean, I may have the most energy, because I'm just fired up about this information. A lot of people don't want to change. Like we don't want to change. We want that right now, Sean.
I don't want to grow up. I'm a Toys R Us kid, huh?
And Toys R Us even got wiped down and had to change their Jeffrey was out of business for a minute. You better grow up.
Yo,
Jeffrey had to get his grown.
That song messed a lot of people up.
Yeah, messed them up.
Look back, like I don't want to grow up. I'm a Toys R Us kid.
Yeah,
man.
you have to educate yourself. It's not if you don't like reading, it's audios out there. It's so many different, like you said, podcasts where people could get information, but you gotta rap it dope, baby. You gotta reach out to the people who are trying to educate you. I'm telling you, a lot of times I think people want to lead me where I used to be. The mink wearer, the Cartier glasses, the gator shoe, the Maury sneaker.
The old me, go get my old album.
Right. I'm trying to give you what is it, $1 million worth of games for $9.99, right? $9.99. And so people don't want to hear it sometimes. They don't want to believe that I know more about a specific subject than them, but it's not going to cost me anything. I'm still going to make my money.
We got a lot to unpack with our culture, man.
We do.
It's a lot to unpack.
It's a lot, man. And you know what the sad part is? Can I keep it 100 with you?
Please do.
Frederick Douglass said it's easier to build strong boys than repair broken men. So I'm going to start. I started with the youth, as my big bro Free says, with the babies. Because if I could program them to understand how important it is to educate themselves, maybe their parents will catch it. But I can't argue with you. I can't waste an hour arguing with you when I could teach them something in 10 or 15 minutes. Because that time is valuable. I could teach way more of them than I can debating with you about something that you really are not knowledgeable of. People
don't want to be knowledgeable.
They don't want to be. You just want to sound intelligent because the camera on. Like, now we hear the camera, what I'm saying? No, you need to get, I'm versed in this. Like and sit me down with I'm talking about your most intelligent person. And just ask, I got 5 or 6 hot questions for them. Where do the cash value go when a person dies? The company keeps it. Where
And that's most insurance companies.
no, all. Like if you have a whole life policy, that's how it works. If, for example, people tell me, "Oh, I got paid up term," so all they do is charge you more money, invest your money for that 20-year level term, that 20-year level term, and at the end they give you what they flipped. That's all they do.
The banks flip your money, insurance companies.
Everybody flipping your money. Everybody.
We need to flip our money.
We gotta flip our own money. You trying to tell me 10 of us can't put up $1,000 and buy a crib in the hood and demo it ourselves and buy the sheetrock and do it inch by inch? We could, but guess what? No champagne.
I'm with the shit.
No Remy. We can't drink no. We can't drink no liquor. No gas. You can't have no gas. You know what I mean? I ain't talking about Wawa and Getty. I'm just no loud.
No loud.
Yeah, so I mean, and it's just a discipline, because what if we I know people with 3rd grade educations that ran businesses. It's just, do you want to run a business? Do you want to be an owner, or do you want to be a worker? Like again, Hov said, cats would rather work for the man than to work with me.
Foul, man.
It's like you don't. So in other cultures, they doing it.
They doing it.
They
man.
doing it.
This is the grassroots of all this stuff you're talking about. Like, eventually we're gonna have these investment groups, and we're gonna have these networking events, so we can be able to possibly find your next business partner and build with each other. Like, I wanna initiate that.
What the dope part is, that's why we got lawyers, right? So you get a lawyer. I'm down to help any brother. I'm down to work with anybody. Anybody. They ain't gotta be brothers. They can be sisters. Anybody, right? We could put some money up. It's gurus, like it's investment gurus in the town. Young minorities that know the business inside and out. They might not have all the capital they need, but they know the business inside and out. We could form teams that renovate houses. It's coming, and it's easy. And the thing is, it's some people right now, somebody right now that's a real estate guru that haven't sold a house all year. That ain't gonna sell a house this year because they don't have the people skills. Then there's somebody that know how to rehab a house, but they got an addiction, or they don't
form like Voltron, man.
Right, and we form like Voltron and put it together, and everybody wins. Because how much you think a house, you could get a house in the city right now. The problem ain't buying a house. The problem is rehabbing it. You got the money to rehab it. If you don't got the skills to rehab it, a contractor gonna smell you coming.
Yeah.
So, but if you had your own team in place that could put the house together, and you knocked out one in 60 to 90 days, it's 4 quarters, and you know what I mean?
Right.
You on your 4th house. We on our 4th house. Everybody's eating. Everybody's winning.
It could be done.
It could be easily. People are doing it. They don't look like us. I mean, some of them look like us, but not many.
We just gotta stop trying to be in competition with each other.
And you know what's so crazy, man? What's so funny, right? I just love, like, I really love Trenton, New Jersey. Like, I really do. Like, some people, like, I got Trenton tattoos on me, and I love Trenton, New Jersey, because I know what it provided for me, what platform or springboard it gave me to be who I am as a person in business and go to other places, and they just love me. Even when I was in the Army, shout out to the United States Army. I've been all over the world. People know O'Neal. Like, I always, I've always been a great person to try to do the right thing by people. I really do believe in karma, and energy. We can't, it's no competition. We're losing. We can't argue about who got the best crib in the projects. It's dumb. We can't argue about who parking the best car in the projects. No, let's have ownership.
I did an episode about that.
You know what I'm saying? Like, let's have the mentality, because if one day I'm going, and I'm gonna use this, when my friends used to go to prison and come home, they do like 3 to 5 years. As soon as they come home, they go around to see everybody. Some people throw them $200-$300. Somebody buying some sneakers. Somebody buying, and it helped that person get his swag back because he was that dude, and they don't want him out here looking crazy.
Right.
If you was a good dude, or if you was a goon, they gonna look out because they don't want you to run down on them.
Right.
But the people still looked out. You understand what I'm saying?
Yeah, I remember.
So imagine coming together the same way, because we could do it.
Yeah.
It's I say don't put anything in it too much that you can't afford.
That's an actionable item.
It is. It's too easy, and the thing is, most people that are winning or winners, they was gonna win without you or not.
Right.
So you gotta have like-minded individuals. You can't have crabs. You can't have snakes.
Right.
You got to have people that you could feel their energy, you could trust them. We too old to not be able to. You could tell, cats talking too fast, moving too the money. What you mean the money shouldn't be able to move without 2 or 3 signatures, and we got to all be on the same page. And like I said, get a lawyer. See, we don't like that word lawyer till we fighting for our lives.
Right.
But when you going through paperwork, you need a lawyer. You don't got the odds, right?
Bro. So that's one of the major keys right there. Working together, man. Educating ourselves, podcasts. Don't be afraid of books, man.
Nah, don't be afraid of a book.
It is cool to read and be smart.
And you can read one chapter and be better than you was before you touched it. One chapter, and then figure it out. Like, you got to be able to figure it out. Like, you have to, because you got to ask yourself, where do culture come from? Where our culture regulates America? Like,
pretty much.
Hip hop is the biggest influencer. A pop artist steal a little hip hop swag and sell 5 million albums.
We shaped the culture.
We shaped the style. Right? We start wearing something everybody wear. We throw on Gucci, Louis, Fendi, Balenciaga, Goyard. Everybody gonna rock it. When once one of us wear it, the right person, everybody wants it. So it's like, and we buy it from stores that follow us around and harass us
like that.
So we got to get to a point where we come together and stand for something. I love helping people. Anybody, I don't care what it is. If I can help, because help don't always have to be financially. Sometimes you gotta roll up your sleeves and help. If you got a crib you want to demo, teach me how to do it. So when I get mine, I can help you.
Right.
You know what I'm saying? It's cats and we can do it.
More people like you, Cal, man.
And like yourself, man, because you guess what? It's son, it's you doing this on your time. Ain't no sponsorship yet. You could you on what number what episode is this?
25.
So you could have gave up, you know what I'm saying? Like, but your perseverance is dope and you reached out. And I mean, like I said, you allowing me to educate people about something that they need to know. Right. Because like again, a lot of people are underinsured. They don't know their actual number they need to be straight. God forbid something happens.
And so I mean, before we get out of here, like we can go on for hours and shit like that. How could people reach out to you in regards to their insurance? Like, if people looking for extra income or insurance or work with, or whatever. Like, give them socials or whatever.
Yeah. Right? So my number is my phone number is 609-845-4980. Again, that's 609-845-4980. I'm always looking for people who are interested in making part-time income. And they want to learn the industry, even if you just want to get a financial education for yourself. My office is literally right behind Powerhouse Gym. I just call me. My name on Facebook is Cal O'Neal. That's CAL O''Neal on Facebook. Hit me up, inbox me. We can talk about it. It's free. I'll sit down and go through everything with you. You don't have to pay me nothing. I just want you to make sure that you understand what you have, because then the ownership is on you. Like right now, you ignorant. If you don't know what you have, you just bought something. But if I explain it to you and you still keep it and you don't like how it worked, then that's just being stupid. So I don't have a problem with that. I'm here to help everybody because I want to change lives in the community. I want to make sure that people have it's a big difference between you having a $10,000 policy and you having a $100,000 policy, or a $20,000 policy and $200,000. You might be paying the same money for both and don't even know it. You could have gotten $200,000, but you paying for $20,000. So hit me up. My brother know how to get in touch with me. Anybody ever want to sit down one-on-one and talk about this? Any other agents that want to lie? I love to sit down with you. We can come back on here, invite a cash value agent. We can sit down and go verse for verse. And I just want to educate my people, man. And I appreciate you for the platform, bro. Like I appreciate you, man. It's major.
That you gave up a whole lot of game, man. And
thank you.
That's the goal of Rappin' Dough. We giving up this free game. We talking about all streams of income, all asset classes. And me, you can follow Rappin' Dough on Instagram, RAPPIN_DOUGH. You can also, if you're not, stationary and can catch YouTube, you can also catch us on Google Podcast, Spotify, and radio public. So it's no excuse for you not to get this free game. We need this financial literacy like no other. And like I said, I appreciate my man Cal for coming through, giving
My
up
man.
this game, the insurance game. Like a lot of this stuff I ain't even know. But with that, we'll see y'all next week. Rappin' Duh. Peace.
Peace.